Do you think we are?
All right. What's up, tycoons? What's up, traders? Super excited for today's video. We got Leon in today's video doing another tycoon talk. We're going to go over tons of really important data in today's video. We're going to take a look at some really amazing charts. All right. We're going to take a look at a little bit more of a macro perspective at some parts, like this chart and this chart. We're also going to break down some individual tickers, all right, such as Apple, SPX. All right. We're also going to take a look at the VIX Futures. And then we're going to go into some cyclical seasonal patterns that we have in the market, as well as the market performance in July. And this is going to be influencing, honestly, a lot of our trades in the Discord. All right, so you're going to want to stay tuned through the whole video so you guys don't miss any of it. We'll break down some more individual names as well, such as ULTA, XLI. There's a lot of good looking stocks in the industrial sector. The industrials have been looking really good. All right, this is one of them, STLD. This is another John Deere, BE. And as always, if you guys want to do a one-on-one coaching session, you can email me at ZachlyTrades@gmail.com. And you can also email Leon if you guys would like to book a session with Leon at info@tycoonnetwork.com. As always, the content provided on this channel is for informational and educational purposes only, and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer before moving forward, and we'll go ahead and hop right into it. Now, what we have right here is this is the S&P 500 monthly chart. And the reason I'm showing this to you guys is because honestly, it seems to me like we are in this phase right here. All right. Now, why is that significant? And how do I come up with that? Okay. Well, this is a great chart here by Ciavacho Capital. All right. And essentially, we're looking at the monthly CTM right here, and we're in this range. We're in this upper range here. And typically we tend to stay in this upper range for 26, okay, to 27-year periods. Now, this recent bear market that we had, all right, we didn't really come down to that lower range like we've done in previous bear markets, right? We have the 08, 09 financial crisis time period right here, this period of consolidation. And these tend to be pretty long periods, okay? Again, 26 to 27 years of a bull market. And this suggests that we could have up until roughly 2035 to continue this bull market and continue this bull cycle. Now, why am I mentioning this? Well, if we take a look at the halfway point, which that's roughly where we're at, in this bullish cycle, the S&P 500 gained an additional 444%, right? Now, these are crazy, numbers, all right? These are crazy statistics, basically suggesting that the S&P could go up 444% by 2035. Now, that's not a guarantee, right? This is just one scenario right here. If we take a look over here, the S&P actually gained an additional 142% in this time period. Okay. And so we could get anywhere from, based on historical data, anywhere from about 142% to a 444% gain. Now, AI has really been the big talk right now in the market, and that's what everyone's concerned about. So let's actually take a look at the NASDAQ. Okay. And the NASDAQ in the same exact time periods, okay, the NASDAQ went on just an absolutely insane bull run here. Okay. So in this 26-year period, the NASDAQ actually went up about 2,543%, just absolutely crushing the S&P 500. And if you take a look at this blue box here, okay, so right around through that halfway point, the NASDAQ actually went up an additional almost 1,200%. So, a lot of people are really, pushing the bear market, and that's not to say that we don't have massive corrections, right? If you look at this correction here, that's definitely a big correction. There's lots of corrections along the way, but when you look at the long-term secular bull market, it definitely suggests that we could see some massive gains still up until right around that 2035 period, okay? So, this is some of the data that I'm looking at when I'm looking at long-term investing and figuring out, all right, is this a time that I want to maybe be long-term investing, or is everybody right? Is the market doomed and things are about to drop down, terribly, and it's not going to be a good time to invest? This is some of the data that I'm using right now. When we look at July specifically, July is actually very interesting. And one of the things that I want to highlight is this right here. So on the 10th trading day of July, which July is a little bit wonky, okay? We have a short trading day in the beginning of the week, and then we have the 4th of July. All right. And, but essentially the first 10 trading days are extremely bullish. And what we're looking at here is you want to pay attention to the dotted lines. All right. This is the July market performance over the past since 1950 to 2019. Okay. And the dotted lines are going to be all of the major indices, in pre-election years, which is the year that we're in right now. And the solid lines are just your regular years. And you can see that the NASDAQ, which is actually in blue here, okay, goes on an absolute tear in the first 10 trading days of the year. And, tech has really been what's driving everything right now. And when you look at all the AI hype, when you look at NVIDIA's earnings, when you look at what these tech companies doing and how the NASDAQ is outperforming the S&P and the Dow Jones Industrial Average, it wouldn't really surprise me at all if we see the NASDAQ outperform, extremely during the first 10 trading days of July. Now, that's not to be confused with July 10th. Okay. We're talking about trading days specifically. All right. Now, let's take a look at the NASDAQ in the pre-election year and the aggregate cycle seasonal pattern. And so the NASDAQ typically has its best 8 months into mid-July. All right. Which also correlates with this right here. There's 20 trading days in July, and it peaks right here towards that mid-July. And what do you see here? Well, what we see is we actually get a pretty significant pullback, but really we just chop and we start to trade in this range right here, right? And so this may be something that is due for us to come later in the year, right? Everyone is screaming that the market is too overbought, that everything has to crash back down because all of this ran up too fast and too quick. Well, it seems we still may have a little bit of steam left in the steamboat, and we could continue heading up towards that mid-July, and then we actually start to chop around. Now, does this look like a huge, massive correction, or does this look like healthy consolidation to actually start another bullish cycle later in the last quarter of the year? So
Also,
that's how I'm positioning a lot of stuff right now. Go ahead.
what you said right there at that peak that you have right about here. All right. So when you're talking about maybe it could be a pullback or it might not be. So what's happening middle to end of July? Don't forget we have big tech coming up with the earnings. So
Earnings, and
we
it
have
coincides with
Facebook.
the earnings.
Yeah, we have Meta, we have Microsoft, we have Tesla, we have Google, and Google is like one of the top 10 stocks in the S&P 500. But they have two. They have Google GOOG and GOOGL. They're taking two of the top spots. So that's big earnings. We have Roku, we have Netflix, we have Shopify. All have earnings. Did I mention Tesla? All have earnings mid to end of July. So it could make or break the bull run that you're talking about.
Yeah, no, and I think that it's actually very, very interesting that we typically, so before last year, Apple was known for running up into earnings and then actually selling off a little bit, after earnings actually came in. And this is the time, this next earnings, this next earnings season is really going to be the time for people to actually evaluate, right? Lots of people have been riding the momentum of the first 6 months of the stock market and just going along with the price. And now earnings is going to come out and we're going to say, hey, well, NVIDIA is trading over a 40 price to sales ratio, over a 50 price to, I don't even know what the price to sales ratio is, but it's just insane, right? And you look at some of these companies and they're going to say, hey, maybe we got a little bit too ahead of ourselves and maybe it's time to reevaluate these companies. And then maybe they start to drop back down, or maybe they just consolidate as the chart suggests and really just move a little bit sideways, which would be really healthy and actually give you room for that next leg up. Now, that doesn't have to happen, right? Things could continue to go up. I mean, if companies continue to smash through their earnings and continue to raise forward guidance, the bull market may really, continue running. But when you see multiple stocks up 100%, it does make a lot of sense that eventually things will start to cool off. But a lot of this data suggests that we still have a little bit more to go before we eventually hit a peak and start to cool off. So, we're looking at a lot of trades on how we can capitalize this, knowing a lot of this data historically and what the markets have done historically. Now we're going to look at some individual stocks and, using this macro data and this cyclical data, what can we use that? How can we use that to apply to some individual charts, right? And so I'm going to let Leon take over here, and we have some of his S&P 500 charts right here. If you want to go
Right.
ahead and break down some of these real quick.
Okay, so I don't know if you saw our last Tycoon talk. If you're new, go watch that last Tycoon talk that we did. But we said and by the way, I've been bearish this whole time until we got above 43.25 on SPX. Okay. So I was playing the trend, don't fight the trend, but at the same time, there's a lot of gloom and doom coming, like with a lot of people saying, oh, there's a recession coming. Once I said on the last Tycoon talk, when we get above 43.25, it is going to all-time highs. We're going to exceed all-time highs. It could be this year, and we could get to like 5,000. Zach knows this. I've been saying this since like last year, like literally since like May of last year, I've been saying this. But once we got above 43.25, you'll see we said it in the last video. We went up 125 points since then. So anybody that's been saying, oh my gosh, like, no, we're going to pull back, we're going to pull back. This is what we're showing on why we think so as well. So when he shows the data and we show the charts on the left-hand side, you'll see /ES, which is the S&P 500 futures. It's the brand new futures contracts because, quad witching that just happened. We just switched over, but you'll see the Wyckoff accumulation schematic number 2. Now, the reason why I was thinking we were going to get this significant drop was because I was thinking we were in schematic number 1, which you'll see later on in this video. But schematic number 2, the drop I was thinking we would have would be a spring. So if you wanted to look at the Wyckoff methodology, we'll look at the very next slide, but not right now. We have,
Well, this is
okay,
it right here. This is basically what Leon's got charted up. And this is
right.
just for reference for you guys. We'll kind of go back and forth between these. But this is pretty much a textbook mirror image, almost exact replica of the Wyckoff schematic number 2.
Right, exactly. So I was thinking it was number 1 because the number 1 would take us right below here and create a spring. But we never did that because we just grinded up. It was number 2. That was my bad. But I also had my level that we mentioned, me and Zach mentioned. Once it gets above 43.25 on SPX, it's going to all-time highs. We did that. We went up 125 points. So this is what we have charted out: preliminary sell-off, and then we have the selling climax, super selling climax. So when you're looking for things like this, is it a Wyckoff? Like, what are you looking for? For me, I'm looking for textbook, but also realizing that it's not going to be pretty sometimes. Sometimes you have to find the beauty in
The madness.
in the madness. You have to organize the chaos. So this is the selling climax. I know that this is the selling climax instead of this because I got some bullets candles in here. Okay, cool. Popped up. That's a preliminary sell-off, and then we hopped up. It went straight down. This is the weekly chart. Every candle is red. That's a selling climax. And then we have a huge green candle right here that's almost 400 points. All right. So that is the automatic rally. That's what that is. And then it couldn't get above. Boom, that automatic rally top. That's what we create a resistance for. And then we dropped. We're waiting for it to pop again. So that would be the secondary test. Hop back up. We have to exceed that automatic rally in order for it to be, considered a Wyckoff. So back here is when I was looking for the Wyckoff. Okay. Back here is when I was looking for the Wyckoff accumulation. Yeah, I had it hovering. I'm just used to it. My bad. So
Good.
that's when I was looking for a possible Wyckoff. And then we sold off down here. Okay. We sold off, and I was looking for that next low that we made right here. So I got both of those lows. I'm like, it's a Wyckoff. So back here is probably when I called, like, hey, matter of fact, I think it was right around here is when I called, hey, it's probably a Wyckoff. But I was looking for the sell-off right here for the spring. So that's on me. But then we just grind it up. We grind it up higher high, higher low, higher high, higher low. And then once we got above 43.25, which was somewhere around here, that's when I was saying, hey, it is up, because this level that we're at right here, this whole section is phase D. All right. So it's phase D. What's going to happen is it's doing what it's going to do right now, which is it went up, went down, sideways a little bit. We've been going sideways for the last
Let
couple
me
of
show
weeks.
them. Let me show them the schematic real quick. So
Okay.
when
Yep.
he says phase D, this is what he's talking about, right?
Phase D.
Is
Yep.
he's talking about this area all right in through here,
Mm-hmm.
that's the phase D that he's speaking of. Whenever you go back to this chart and you take a look, right?
Mm-hmm. Yep. And that's exactly right, Zach. So when we're looking at that, we're looking at this area. And just to go over a couple of other things, we want to go secondary test right there, secondary test right there. Now that I know that this was phase B and it wasn't like schematic number one, this was the bottom right here in October. So I was looking at that. I was saying this possibly could be the bottom, but everything anyway. So once we exceeded the 43.25, somewhere around here, that's when we made our last possible support right there, sign of strength right here, boom. And then we came back down. And that is where we're at right now. So we exceeded this previous high right here, and we are currently close to all-time highs. So what we're seeing on the futures, you can look at on SPX.
Yeah, I
I
just
didn't
want to
really
break
touch
that
on.
down for people. We're closer to all-time highs than we are to the recent lows. And
Yes.
if somebody would have told you that in December of last year, that hey, in 6 months we're going to be 300 points away from all-time highs, and we're not going to be 300 points closer or away from the recent lows, most people wouldn't have believed you.
Right. And just so you know, about 215 stocks in the New York Stock Exchange made all new all-time highs. So like 215 last week, that's a big number. So when we say right here, we exceeded that high, that previous swing high, that was super strong. It wasn't like, okay, we're gonna like have some bears here. No, it busted through there like, Walter Payton or something. Like it just went straight through. So what we're looking at is we're in phase D going to phase E, which would literally be when I said in the last episode of Tycoon Talk, it's going to be a point where we go straight up. And that's the point we're at right now. We could go straight up. And I'm not talking like, where we might go. I'm talking literally, I'm gonna show you in the next slide, but we can go to all-time highs in the next 2 months. Easy. And it's not even gonna be it's gonna be a no-brainer. We could
Yeah.
literally go to all-time highs in the
So
next
this
2
is the start of that phase E right here. And this is what you're saying. And remember, people, these are much more macro charts, right? This is
Right.
the weekly chart. It's not a smaller time frame like the 1 hour or 30-minute chart or something like that. So,
Right.
these candlesticks, they take time to develop. But
Mhm.
if this is the phase D and we're breaking into that phase E, I mean, you see what phase E looks like. And so
Straight
that's
up.
kind of where he's getting that from. Go into this a little bit more right here on SPX.
Okay, so I wanted to kind of give the daily because the weekly has the perfect Wyckoff for slash ES, which is the SP 500 futures and SPX. But when you look at SPX on the daily, we have a perfect J hook. Okay, some people might call this a cup and handle and think, oh, it's got to come back down and make a handle. It's not. It's not going to do that. The reason why it's not going to do that is because it got above this swing high right here. We closed super strong against above it too. So what happens when we exceed, you see this wick right here, this wick right here, not only the wicks, but the closes right here, the opens, all of those bears are waiting in the bushes, but we broke through all the bears and literally closed above, creating a new swing high. And not only that, but a new 52-week high. So this is the new high for the last 52 weeks that we closed at on Friday. So the J hook pattern you'll see right here, I got a reference so you can see it just goes straight up. All right. And
Mhm.
I have the, if you wanted to pause to read, this is what is showing. It's normally a continuation, so you're not going to get a pullback. So we see a gap right here. I'm sorry.
Gap
We
and
see
go.
a gap right here, but we also see a gap right here. We also see a gap right here. These are breakaway gaps. Those breakaway gaps don't fill. This right here was a runaway gap, so it came back and filled it and went back up. All right. But gaps like this one right here, which is what I'm circling, because I think that is the same gap that we're going to create. We might not gap up, but if we do, it's going to be a breakaway gap, which just goes straight up. It's not going to come back and retest. It's not going to come back and like fill it. It's just gone. So
And so I
looking at
just want to go over the J hook some more because
mhm,
we're seeing all the signs of confirmation right now. So it should be a signal of a continuation. We're in an uptrend currently at the moment, right? We're in that uptrend. It occurs during an uptrend, right? And then the pattern starts with a rapid increase in the prices. And that's what we've seen is people are saying things are running up too fast. I mean, that's literally all you hear across the market. Okay. Then, there's a candlestick pattern that gives a bearish signal. All right. And, that's what we started to see, right? Is we started to see, it looked like we were topping out here and then we actually gapped down and started to come back down. And so starting to give people a bearish signal here, I mean, it's almost textbook. Not everything's going to be always exactly textbook, but you look at those two red candles right there and you look at these two red candles right here, it's very close to almost a mirror image, right? And then,
see,
when you look right here and you see the prices fall, then reach a level of indecision, there should be a bullish signal. And that was actually Leon's, custom indicator right here, this green
mhm,
arrow. So we came back down to that area of indecision. We got the bullish signal, which is actually scripted in an indicator. And, we got that move. Prices start to rise, right? That's the very next phase. And they reached the previous high. All right. And if the prices keep rising, going above this high, there should be a new uptrend in prices. If
mhm.
prices don't go above the high, the pattern has failed. That's not what we got. Pattern went above the highs, both this high and the wick. So it went above both highs. So pretty
And
much
stuck the landing.
everything on the J hook looks to be giving us a full confirmation. We combine that with that July data and how markets tend to perform in the first months or in the first 10 trading days of July. Keep in mind, this is one trading day here, 2, 3, 4, 5 trading days, guys. The S&P 500, the SPX index went up over 100 points in 5 days. So
And we're not
if
even
we're
talking about
300 points
July yet.
away, we're 300 points away from all-time highs,
Mhm.
and the first 10 trading days of the market look extremely bullish. We have a bullish J-hook pattern right here. I mean, it's very possible that we could go up another 100 to maybe even 200 points and just, and not that that has to happen. It could be a smaller gain, but this is definitely, some of the things that we're looking at and we're trying to figure out how can we capitalize on that cyclical data. And then we come here, we look at some individual tickers and we start looking at the data there. And these patterns just look really, really enticing now at the moment.
Real quick before you go to the next slide, exactly spot on. But for me, my prediction for this month of July, I think we go up like 250 points or like 250 to 280, maybe 300 points in July, like in July only. I really think that that is what's going to happen in July. So,
Yeah, I just wanted
yeah,
to try to kind of like give people visualize it, help them visualize
mhm.
it. Like this is 5 trading days right here. If we
Five.
went up over 100 points.
Now, if you from this point see, so the reason why I pointed this out should gap up or could gap up is because over here we were right at the top of the Bollinger Bands, right? So we're at the top of the Bollinger Bands right now. You know, what I like to do is, and pro tip right now. So if you don't watch the video, you're not gonna know the pro tip. But the custom indicator that he said, I coded that and it took me like 60, 61 tries because there's stuff out there, but it's late. And I wanted it to be as on point as possible, like right away. And that is, it might look like something that you've seen before, but trust me, I've taken the time and, we've tested it and, proved it. So something else I like to do is I like to look at candles like this. You see this candle right here? I want to look at that candle. And what I want to do is I want to look at this point that is at right here. And I want to see what that is, what level that is. And then I count whatever the close of that candle or the high of that candle is. Now, I'm a nerd. So I subtract the high of that candle from the point in which it broke through the Bollinger Band. So let's say this is, I'm just guessing right now, but let's just say this is 42.60 and this is 42.90 for the high. Now I know, oh, okay, this particular stock can go 30 points above the Bollinger Bands. So when people are thinking, oh, we're going to stop at the Bollinger Bands and this and that, like, for future reference, if it really did want to, it would take like 30 points. Because over here, that's a good resistance. It's squeezing over here. But once you get to the point where you see the Bollinger Bands trying to open up, then you look at this candle right here and you're like, I wonder how far it can go up. So ironically, that's around maybe 20 to 30 points for SPX. So that's exactly where we are right now. So that's where I think, okay, above wherever this Bollinger Band goes, we could possibly go maybe 30 points
And
above
I
that.
and I actually just counted it from this candle to this candle up here. That was
Mhm.
about 16 days, 16 trading days. And we see the
Wow.
S&P 500 went up over 300 points.
Yep. And that's exactly what I'm
And we're
looking for
300 points
July.
away from all-time highs.
We can go to the next one if you want to. All right, so we're looking at Apple. So another one that we called out in the Discord. So we have the Wyckoff setup, Wyckoff schematic. This is schematic number 1. Now, this is what I was telling you about. I thought it was going to make a, let me get the what. I thought it was going to make a spring right here for SPX. It did not make a spring because it was schematic number 2. And I don't just trade by Wyckoff. But when I see the setup, we use everything that we know to make the most, educated decision when investing. So when I saw the setup, I knew this right here, it's not going to be textbook, kind of like here where you see this is lower, the selling climax is lower than the secondary test. But I knew that it was possibly a Wyckoff just by how this went. Just by that movement, I was like, this could be making a Wyckoff. So when we look at it, I knew it was probably going to sell off at this selling climax right there. That is when I knew it was probably going to be schematic number 1. And around here, I believe, is when we called out in the Discord. Once it got above this high, I wanted to make sure. Once it got above this high, which was all the way over here, I was like, okay, cool. That definitely solidifies this is schematic number 1, and it's possibly going to go to all-time highs. Pretty sure
Yeah,
it's
we've
going to
been
get to
saying
like,
it's going to break all-time highs for like 2 weeks.
yeah, it's pretty much going to get to like 191. My prediction for Apple. So you see how actually let's compare this to the S&P 500. So SPX, remember I said it's going to go straight up. Now you see how Apple literally went straight up. It went straight up, and it's going to keep going straight up because that's what phase E is all about. Phase E is the start of the markup. So if you look at the market cycles, we're literally starting right here, phase E, which starts the markup, which is like the massive bullish trend that you saw on Zach's macro chart. So what I'm looking for on Apple next, I'm looking for 198, then 205, and then 250. 198 and then 205. It already hit my 191 target. So I think 198 can get hit this week, but between 198 and 205. So we're looking at VIX. This is slash VX, which is the VIX Futures. I like looking at this because people look at VIX. There are a whole lot of tickers for VIX. There are like the 9-day VIX, there's the 0 DTE VIX, the 1-day VIX, the regular VIX. So I like looking at the VIX Futures because this shows me what happens after market hours and pre-market. And I haven't seen anybody else mention slash VX except here on Tycoon Talk. So that's something that that Zach has actually provided for you guys. But this shows you the market hours during futures. So S&P 500 futures, it's aligned with that. And what we see is a huge downtrend. I had somebody tell me, hey, every time VIX gets this low, it usually pops, right? It usually pops. Now, we look at the historical data, but also everything is happening new. There are new things that have never happened in the market. And what I see is that that inverted J hook, which the reason I think that's going to happen is because once we take out this low, this swing low, there's a gap below here. You can't see it, but if you look back on the chart on slash VX far enough in 2020, there's a gap from 2020. So I think that this isn't going to be one of those, okay, we get here and then pop. I could be wrong, but I think it's going to be like a slow grind down to that gap from 2020, which would help us go to or exceed all-time highs in the market. It's kind of hard to go against the data that Zach is providing, along with 250 stocks making new all-time highs compared to 17 or something like that, creating new lows.
Yeah,
So,
and that really helps to show the breadth.
right.
You know, in the very beginning of the year, the first quarter of the year, everyone said, "Well, this is a fake rally. It's
Hmm.
only 7 stocks, right? It's only big cap tech, and you know, you guys need to sell everything now while you still can,
Hmm.
because everything's going to go back down, right?"
Hmm.
And you know, really, we're seeing many different stocks, many different sectors. We're gonna break into the industrial sector
Hmm.
later. I like this one a lot, especially for in this consolidation period that we're most likely gonna get
Hmm.
in the next 2-3 months. I'm definitely gonna be looking at some you know, industrial stocks in the industrial sector and see how it holds up in that cool off period. And you know, maybe that'll be a good end of the year play.
Great stuff, and that'll be good for the Dow as well, DIA. So
Yeah.
right here we have the SPX setup again. I like trading SPX because you can make the most money trading SPX. Like, focus on one punch, like Bruce Lee says. So what we're gonna do is we're looking at the macro chart, which is the monthly. All right. So we're looking at the monthly, and we're seeing at first I was like, is that a bear flag? Is it a bear flag? Is it a bear pennant?
Not no more.
Um, a lot of people say, oh, well, you can't trade with we don't do patterns and stuff like that. I'm gonna do whatever works. So I was looking at these highs and I said, if we break these highs, then I'm going to see if it's the setup that I think it is. So the volatility contraction pattern, or VCP, that's when it started creating higher highs, higher lows, higher highs. Once we broke above this level, which was that 20 SMA on the monthly chart, that is when I knew it was verified to go to all-time highs. So once we broke above this level right here and sustained it, you see last month we literally we just broke through it, and not only tested it, we demolished it. So we're almost to my first target right here, which I think will exceed in July, maybe the first week or second week. But that possible volatility contraction pattern is pretty much solidified. And what we're seeing is another indicator of mine. I'm not going to tell you which one this is, but it's when another indicator crosses with the 20 SMA. This is literally like,
So
I
look at
want to
this right
say,
here. So we
right,
have holding above your green line right here.
right.
Look at that candle and look at the last candle that we had the last time it was bouncing off of there.
Yes, straight up, straight up. And that is exactly what's going to happen this time. That's exactly what's going to happen. We're going straight up. We said it the last Tycoon talk. I had all the bearish talk. I said, but if we go above 43.25, I'm switching bullish, and that's what we're doing. So the VCP shows the impending bullish cross right here. And when I tell you this is like 90 to 95% like accurate, I've tested this, and actually I created this combination. Nobody else has this combination. Nobody else knows what it is. I created this combination, and you can ask Zach, it's like 90 to 95% accurate. Once we get that cross on the monthly, it pretty much solidifies us to not only exceed all-time highs, but create another what? J-hook pattern on the monthly chart. So the smaller chart, the daily chart, will go into the weekly chart for the Wyckoff, which will go into the monthly chart for another J hook. So that's what I'm seeing, and that's like three different ways of saying it's going up, aside from historical data. So right now we're saying, hey, SPX, um, while it's not at all-time highs, this is what I would suggest, and this is honestly what I'm doing. Like, Zach is one of my good friends. We're just telling you what we're doing. It's up to you to decide. Personally, I would be getting contracts for 4,800 or for 5,000 or 5,100, because I think we could hit 5,100 this year. But I would be getting those contracts a year out, or for 2025 if you can afford it. I would go 2025, as many as you can. And like everybody's going to tell you that the market isn't going to go up. It's not, it's all bearish. What happens when, like last week, we go above the previous swing high on not even the daily, but the weekly chart as well? What happens to those short sellers? It puts gasoline on the fire and it fuels the run. So all the bearish talk, I'm done with it. Once we hit 43.25, I'm looking for long contracts. If you don't want to do SPX, you can do 500. You can do 500 calls for like 2025, but don't not do it and say, dang, you know what? I probably should have did what ZachlyTrades was talking about, because I've done that. I've done that. I'm literally just saying things that me and Zach have learned from. And when we see things like this, once this crosses, trust your analysis. So we can go to the next one if you want to. I know there's an AI hype, and I don't think it's a hype. I think it's here to stay. Just like the internet, everybody said the internet is a fad, is a phase. What happened? It scaled down, got rid of the trash, and some of the good, companies like Google and YouTube and others stayed around. Internet is what it is today. So AI is gonna it's going to be like that. So I don't think it's a bubble how we were intending it might be a bubble, because there's data to back up the possibilities
Well,
for
my
the
whole thing in reason for calling it a bubble is
uh-huh.
what happens with bubbles is there's always winners, and there's always companies that were valued correctly and in things like this, and they did have those really big potentials, right? You look at Amazon. All right, it took a very long time for them to recover from their .com price levels, but eventually it was right, right? And so that's what's going to happen with AI is you're going to start to see IPOs, you're going to start to see SPACs, you're going to start to see pretty much any company possible start to mention AI and try to pitch themselves as an AI investment company. And that's where the bubble forms. Okay. The
Mhm.
bubble forms from two areas, from that, and then it also forms from not knowing how to properly value something. So there's no way to actually put a monetary value on what AI is going to bring, and how it can possibly increase revenues, increase earnings, increase margins, and increase productivity, right? For right now, it's all speculation. And so that's where the bubble forms. But what Leon is mentioning is that there are good companies, right? And there are actually solid companies that do have really, really good potential.
Mhm.
And, whether it's on the hardware side or the software side, there's going to be winners in this AI bubble that's forming currently at the moment. And so this is just one of the ones that he's looking at right now at the moment.
Right. So Unity, and when he talks about the bubble, so there's going to be IPOs, but you're going to make money from the IPOs. It's going to be liquidity, because a lot of people are going to rush to there because it's like AI, but be careful with the liquidity, because that's how rug pulls happen, exactly as he was saying for bubbles. But I don't think Unity is one of those. I really think Unity is a sleeper that nobody's talking about. Everybody's talking about nvda, and after nvda, in our Discord we were talking about Adobe. People made 1,000% on Adobe in our Discord, like legit. People made 1,000%
After making 2,000% on this video.
after. Yeah. So Adobe, and it was still going. There's some people that probably could have been millionaires if they would have held, but risk management. So I think that Unity is going to be one of those. I don't know if it's going to be really hype like Adobe, because Adobe has like Photoshop and a lot of other staples in other industries, which made it strong, or as strong as NVIDIA. So it kind of ran off the rails. But this is for gaming. So there's a huge bullish divergence on the monthly, and you see the bullish divergence when this is going down, indicators going up. That's how we see the bullish divergence. My first price target is right there at around the 45 or 95 range. All right. And then my next price target is going to be around like 155. Okay. So we are right at the breakout level. I would honestly go with 2025 calls right now. If you can't go at the money, as close to money as you can get. But 2025 call contracts for options, or if you like shares, it's only $43 right now. If we get to when we get to the first price target, it's going to be 100% on your shares. So we have other stocks that we've done this with, like Matterport. But yeah, this is one I'm looking at on a monthly chart, and it's a long play, but it is a sleeper for AI. And then I'm gonna go to the next. Okay, yeah. Boom.
This one actually right here is XLI. So I mentioned industrials a lot, you know, and we've basically been tracking this one for a minute, really ever since it broke out here. You know, this looked like a diamond top to a lot of people, right? To all the bears, they're screaming a diamond top reversal here, and we're going to see a massive correction. We actually got a breakout to the upside, so you could call this more of a bull flag. You know, if you wanted to, more of a bull flag right here. And this thing is trying to break all-time highs as well, right? So it's not just tech, right? Everyone's saying it's just tech. This is the industrial sector, guys. All right, these are the highs up here, right? We have this clear supply zone up here. All right, first target we hit, all right, which was right here. This was our previous highs, and we actually got a very textbook breakout retest. And what's really popped out to me was we bounced off of the first Fibonacci level, which is the 23.6. When you bounce off of there, that indicates a very strong uptrend, right? And that's exactly what we got. Now, we also bounced off of the month-to-date anchored VWAP, which is this yellow line right here. And the anchored VWAP, which the VWAP is just your volume weighted average price. This is where large market makers and large institutions place their orders at, right? When you look at someone like Ken Griffin, the most successful person ever on Wall Street, pretty much making the most money, all right, and he's a market maker for Citadel. He says that he places his buy and sell orders at the VWAP, at the volume weighted average price, right? And so he's not chasing things up here. When it comes back down, boom, they're filling all their orders right here at the, you know, anchored VWAP, in this case, you know, the volume weighted average price. And you just see a straight shot up. And, you know, this thing really, if it wanted to, okay, we could get a strong pattern going up here up to 112, maybe even 116.5. Those are going to be some of my longer term bullish price targets on the industrial sectors of XLI, right? Now, this is a sleeper stock right here. And I've talked to many people in the Discord about it. I dropped a very in-depth fundamental and technical analysis video. But ULTA, all right, basically crashed. All right. This was a stock where if you look at it on a weekly chart, the stock looked like it only went up and it never went down. Right. And then all of a sudden it faced this huge, massive correction, right? Going from over $550 a share, crashed all the way down to the $400 level. Now, this was a stock that I was telling people, I was like, hey, this is a good buy right here, especially if you've been looking for long-term stocks to hold, or, you know, trying to get in at stocks on a sale, right? Because the whole reason that a lot of people are upset about this bull rally and this bull market that we've experienced is they feel like they haven't been able to get a good sale, right? They're like, oh, well, I held out on buying things because I was looking for a good sale. All right. If you have a girlfriend, if you have a wife, okay, you know, Ulta makeup, I mean, that's where the money is, okay? And there's literally stocks that make money off of this, right? Every time you $50 won't even get you anything in Ulta, right? I mean, you got to spend like $500 minimum, you know? And so,
What's that wife talk?
this was just like super enticing to me. Okay, we're using the Fibonacci fan trend lines here, and you can see that we actually bounced off of this bottom trend line here, right? And this is done all, you know, mathematically, right? We're just connecting the swing lows to the swing highs, and it gives you all of these trend lines here that we're looking at. And, you know, we had the key levels here, and we're looking to be bullish above 425. And look at how well the price action reacted there, right? We came up to that level and we consolidated, and this is exactly what you want to see for a reversal, you know, from a Fibonacci standpoint, right? Is you want to see the move down, the retracement, and then you have the consolidation and breakout, and that's when you can get that reversal. And that's exactly what we got. And we had this huge, massive gap here on ULTA that we've pretty much almost filled now, right? And this was a huge overreaction gap on earnings. And you can tell it's an overreaction because afterwards, the stock prices quickly started to fill that gap up already. And it's very close to filling, right? It's got a limited amount left to the upside, right around 480. So about another $10 and it will fill that gap. But this is definitely a stock that a lot of people have been sleeping on, and it may continue having some more potential upside. You know, you can see here it was deeply oversold in that initial, you know, earnings overreaction here. And that's when we started to see price really recover, buyers start to step back in and, realize that, hey, you know what? My wife can't stop spending money at Ulta. Maybe this is actually a pretty good stock. Another one is DE, and this is more of the industrials, back to the industrials. This is one that I've been posting in the Discord as well. Right. And we had this initial, kind of a triangle pattern here. And it's just been straight up, guys. Now we're starting to see some pullback and some consolidation here. All right. But ultimately, if we can hold above 409.41, that's where we're going to be bullish above as well. Right. If we can really start to consolidate here and get above there, that's when we have the chance of hitting some of our price targets here around the 440 area, maybe potentially even up to 450 and 460. Another notable thing, right? We mentioned the anchored VWAPs. If you look here at this blue line, this is your year-to-date anchored VWAP, and we bounced exactly. That's exactly where buyers stepped in at the year-to-date anchored VWAP. And if you also take a look, it's an exact perfect breakout and retest of the trend line here. So I'm going to look for and see, do we get some healthy consolidation here and continue to head back up? Or, something you need to be cautious of is a look above and fail, because this is the moment right here, right? This is the full opportunity for bulls to actually show that they're in control of the price action and going to push things up higher. A look above and fail is actually very significant and very powerful because of the reason that this is the opportunity for bulls to take advantage. If they don't take advantage and we actually come back down into this range, it's going to be a bearish signal that sellers are actually in control of the price action and that this was a false breakout. So if that happens, most likely we're going to head back down towards the lower end of that range. So it's really at a good trading opportunity right now. From both ends, from long and short, you just need to wait for a little bit of confirmation. Are the bulls going to step in and push things higher and break past our previous high? Or are we actually going to fall back down into this range? And if we do, that's going to be a little bit of a bearish signal. Now, keep in mind when speaking of the anchored VWAPs, all right, we have the blue yearly, and then we have the yellow month to date. What this basically tells you is that if you've been a buyer and you've been dollar cost averaging since the year began, you're green on your shares at the moment. You're above the yearly anchored VWAP. And if you've been buying since the month started, you're actually green on your shares and you're above the anchored VWAP. So, right now, the bulls do have a little bit more control than the sellers at the moment. And they're all in green and they're feeling good about the position. Now, will that continue? We'll have to see. Again, we have to watch out for that look above and fail. This is STLD. This is Steel Dynamics right here. This is another one that I've been posting in the Discord a couple times, and we're actually above that bullish above level, right? We got a very clean, breakout retest, and now we're pushing higher. We're above that year-to-date anchored VWAP right now. We actually closed exactly right above it. Again, that's where we found support. Remember, this is where institutions are looking at, right? They're not so much using some of the technical analysis that we are, unless they're a technical analysis based institution. But majority of all these institutions, hedge funds, and market makers, they are using the volume weighted average price. And so it's pretty significant that we were able to actually close above the year-to-date anchored VWAP, and we haven't been above and been able to close the year-to-date anchored VWAP back since March of 2023. So, that's pretty significant to me. And if we're going to be able to hold above this 105.9 area, I do think we have the potential to come up to 114, 118, maybe even 124, 126, just depending on how far things want to go. It does look like we are getting a little bit of a cup and handle pattern forming right here. We can see we have these highs right in this area here. Okay, and we have our nice cup. We got the pullback, we got the handle, and we're really trying to break out past these highs. Now, if we do get that cup and handle move, right, you're going to see something like this happen, right, where you're going to see the base of the cup move up, and that's going to be a move, potentially take you up here to that 124 area on STLD. Again, this is another industrial stock, right? So, just kind of giving you guys a lot of individual charts to go with some of the macro data and some of the cyclical data that we presented to you in this video. And hopefully you guys enjoyed it. Remember, you can always email us for a personal coaching session at ZachlyTrades@gmail.com to reach me, or you can reach Leon at info@tycoonnetwork.com. Really appreciate you guys taking the time to watch the video. If you did, smash that like button, subscribe to the channel, share it with someone. All right, share it with your friends, share it with someone you may think be interested, and we'll see you on the next one.